I'm joined by the Chief Secretary to the Treasury, Chris Philp. Good morning to you. Thanks very much indeed for joining us.
Good morning.
Emergency budgets are usually designed to solve an emergency. This one seems to have created one.
Well, this was a growth plan designed to get the UK economy growing. Ultimately, the only way that families and households across the UK are going to see their incomes sustainably rising, the only way we're going to see good new jobs getting created, and ultimately the sustainable tax base delivered to fund our public services like police, health, education and so on is by getting our economy growing. That's what the plan aims to do, partly through tax cuts, but also through supply-side reforms. Reducing business regulation, building more infrastructure like road and rail more quickly, building energy infrastructure so we're not dependent on energy imports. Those parts of the plan, I think, all of those together, will get our economy growing and ultimately put us in a much better position.
OK, so you say it's going to be good for people, and yet the reaction on the markets has been horrendous, and people this morning will be waking up. They were already worried about rising bills. Now they're also worried about their mortgages and their pensions as well. So what would you say to them?
Well, look, I think on the question about interest rates and mortgage costs, therefore, by extension, I mean, across the world for the last probably 6 or 9 months, we've seen a rising interest rate cycle. Central banks around the world have put up rates. In fact, the US Federal Reserve have put up interest rates by more than the UK's Bank of England. And that's in response to the inflation, the global inflation caused by Putin's illegal invasion of Ukraine. And in fact, one of the reasons why this growth package is so important and why it included tax cuts is to alleviate the burden placed on households, and why it also confirmed the energy intervention, making sure that households don't pay, on average, more than £2,500 this winter and indeed for the next 2 years for fuel. Do you remember just a few weeks ago, people were talking about energy bills this winter of £5,000, £6,000, even £7,000 a year? And thanks to that intervention last week by the Prime Minister and by the Chancellor, that is not going to happen. So we've taken that action to protect households at this time of unprecedented global economic difficulty.
Lots of other problems that people now have to worry about.
As I've said, we've seen changes in or turbulence in global financial markets for a number of months, not just here but around the world. The Bank of, your correspondent just a minute ago talked about the Bank of England's intervention yesterday. Of course, the Bank of Japan intervened actually in their currency market just a few days ago. So other central banks are having to take action as well. The Bank of England did what it was supposed to, acting, of course, independently, and it had its desired effect. And by the end of yesterday, the market had settled down again.
You say it's a global problem. The IMF hasn't had to issue a stinging rebuke to any other G7 country, has it?
Yeah, look, I saw the IMF's comments. I respectfully disagree with them. The response that I'm sort of most interested in is the response by British business organisations who represent the businesses, the British businesses that are going to grow, that are going to create these jobs. And if you look at what organisations like the CBI, the Confederation of British Industry, the Federation of Small Businesses, the British Chambers of Commerce said last Friday in response to the growth plan, all of them welcomed it really strongly because, speaking for their members, they can see it's going to grow our economy. OK, so
business groups liked it. And would you agree that although some of the tax cuts were well received, you just went too far?
Well, look, I think on the tax question, I think we had very high levels of taxation and they were due to go up even further. That was the previous plan. In fact, the corporation tax cut wasn't a cut, it was just keeping tax levels where they are and reversing a very recent national insurance increase. Look, the view we take is that in order for an economy to grow, we have to have competitive rates of tax to incentivise investment, but also to encourage both very successful people and also businesses to choose to locate in the UK. So I used to be Technology Minister until just recently. And, the most successful technology businesses in the world and the most successful technology professionals, coders and so on, they can choose where to locate. They haven't got to come to the UK. And by having a competitive rate of tax compared to other countries, we can attract people to the United Kingdom to make a contribution, to pay their taxes critically, and to help grow the economy and create new jobs.
But the markets were prepared for some tax cuts, but not to this degree. Was it really necessary to scrap the 45p rate, which only benefits the really wealthy anyway? It's not even due to come in until April. It didn't need to be announced now and take people by surprise.
Well, I think a couple of points. Firstly, the top rate of 40%, so now 40%, reducing from 45, makes us internationally competitive. It puts us on a par with a number of other
but it only
economies.
Benefits the wealthy.
Well, that's true. It benefits people who earn more than £150,000, but very often those are people who are internationally mobile. They can choose where to locate. I talk to people who have got a choice about whether they work and live in, London or Edinburgh or Birmingham, or whether they go and live in Singapore or New York or somewhere. And we want those people to locate here in the UK. And so one other point, in terms of the size of that measure, it amounted to less than 1/20th, less than 5% of the total fiscal measures. It was a very small part of the package. Most of the measures, like cutting national insurance and cutting the basic rate of income tax, which were the most expensive measures, they made up sort of 80% of it. Those are targeted at everybody. Everyone benefits. You, me, everybody.
But the truth is that the markets weren't properly prepared, were they, for what came at them? And when the mini-budget was announced, it didn't have the OBR's independent assessment of what it meant for the economy and how it was going to be paid for.
Yep.
And that spooked the markets. They were badly prepared, weren't they?
And that's why, well, I mean, I can't comment on markets preparedness, but I can say...
No, I mean, sorry, the markets weren't prepared for what you announced. You didn't prepare the markets, Adam.
Well, I mean, quite a few of the measures, particularly the more expensive ones, like the energy intervention to protect households, the national insurance reversal and corporation tax had been sort of quite well trailed in advance. But we are going to do, of course, a full OBR scoring. In fact, we're going to do it twice this year, as we're required to do by law. Once on the 23rd of November.
That's 8 weeks away.
Well, once on the 23rd of November, want it to be done properly, and again with the spring budget. So there'll be 2 OBR scorings this year, which is required by law. We're also going to be setting out, the Chancellor rather, will set out his medium-term fiscal plan, which will ensure that government debt, as a proportion of GDP, the size of our economy, falls over time. Because we are going to do this responsibly. And we should remember, of course, that we start this in a good position as a country because our existing debt to GDP ratio, that's the measure most people use, is the second lowest in the G7.
Gerard Lyons, who you will know, I'm sure, often referred to as Liz Truss's favourite economist, said that Kwasi Kwarteng had failed to adequately prepare the financial markets ahead of this announcement.
Look, I don't accept that. Kwasi Kwarteng, the Chancellor, is in constant contact with the markets. He's meeting the Governor of the Bank of England on a very regular basis. I think just yesterday he had meetings together with his colleagues with financial market participants. I think he's had several meetings with them in the last week or so. So I don't think I accept that, but he is in constant contact with market participants.
Doesn't the OBR need to produce its report sooner than the end of November? Well,
look, I think we're going to do this just in an orderly fashion. We've set a very clear date, the 23rd of November. They'll do a full scoring of the measures that have been taken. They'll update their forecasts. Let's just do it in a measured, organised way. That is the right way to approach this, and that's what we'll get on the 23rd, in addition to our medium-term fiscal plan.
Has the government made any mistakes?
Well, no one's perfect, but I think I'm not going to sort of apologise for having a plan to grow the UK's economy, which will increase people's wages, that will create new jobs. I'm certainly not going to apologise for having an energy intervention, which is protecting every single household in this country from what could have been devastating bills this winter.
You say no one's perfect. You acknowledge that some mistakes were made.
Well, look, I'm not going to get into this sort of post facto raking over. But the point I want to make most clearly is the one I just made, which is having a growth plan to grow jobs, increase people's wages, make sure the UK is internationally competitive, introduce supply-side reforms, things like the transport infrastructure, reducing business regulation. All of that will make the whole country ultimately better off. And I say the energy intervention is protecting every single household in this country from what would otherwise have been devastating bills.
You say it's going to make the country better off, but what about public spending? You've asked government departments for efficiency savings, haven't you?
That's right. So on the public spending side, two points to make on how this gets paid for. I mean, clearly growth is part of it. If we grow the economy, it generates more taxes.
How long will that take?
And we set out actually in the Blue Book last week on page 27, it illustrates that if we can get our economy growing by 1% faster than it otherwise would, after 5 years, that generates £47 billion of additional tax revenue. But we're also going to be responsible with public spending, as you just sort of suggested, which means, first of all, sticking within the existing spending limits, the so-called Spending Review 21 limits. That was a review done about a year ago. It covered 3 financial years. We're in the first of those years now. We are going to stick to those spending limits. So the efficiency and prioritisation exercise that you referred to is designed to do 2 things. Firstly, make absolutely sure we stick to those spending limits. And secondly, make sure that we're prioritising expenditure not on anything that's wasteful, but on things that really deliver frontline public services and drive economic growth.
People have heard so many times before efficiency savings being sought from departments. This basically means that all departments are going to face a squeeze, aren't they?
But we found about over £3 billion of efficiency savings last year. As I say, we're going to stick to the so-called spending envelope. We're going to stick to those planned spending levels that were set out a year ago over the next 3-year period. But we're going to make sure that we're spending the money in the best possible way, and we're going to make sure we don't exceed those limits.
But with inflation at 10%, your money just isn't going to go as far. And departments like the NHS, like the Health Service, just can't cope, can they? I mean, Charlie Bean, former governor of the Bank of England, said spending cuts made necessary by this mini-budget could finish the NHS.
Well, the NHS has had a record funding settlement, and to be clear, the inflation that is felt by the public sector is different to the inflation felt by sort of you and I as just consumers. It's a lower figure. And even despite the higher inflation that we've seen recently, it's a global phenomenon caused by Putin's illegal invasion of Ukraine. Despite that, the spending envelope, or spending levels that we're working within will still see real terms increases in public spending, adjusting for public sector inflation, but we are going to stick absolutely rigidly to those spending limits because it is important to be financially responsible.
A lot of people are fairly horrified by what's been going on in the markets, not least Tory MPs, who some publicly, a lot privately, have talked about their discomfort. Should Kwasi Kwarteng resign?
No, I don't think he should. The Chancellor has, I think, set out very clearly a vision for growth, to get our economy growing. That is what we need. And if you think about this in the sort of medium term, what we need is an economy that is delivering the jobs of the future, attracting people and companies from around the world who are successful to work and to produce jobs here. That is the right plan. And he's fixed, and he and the Prime Minister working together have fixed this energy crisis for families. We would have had bills of £6,000. That's, they've intervened to stop that, and that's the right thing to do. And I think families up and down the country will be pleased they've got a Prime Minister and a Chancellor who have taken urgent, decisive action to protect them from the effects of Putin's war when it comes to energy bills.